Rechex. My name is Mehdi, I'm with Rechex, and we're welcome today Anke for this special Rechex with me episode. Anke, pleasure to have you on the show today.
Hello, good afternoon.
Fantastic. So, Anke, can you please tell us a little bit more about yourself and what you've been doing so far?
Yes,
Um,
sure. I'm a credit specialist. I worked on the buy side, on trading floors. I worked on the sell side, and in my last role, I worked at Moody's, and I was running there the commodity team. So all the commodity credits, oil and gas, chemicals, as well metals and mining were in my team. So from that perspective, I think I know a little bit about the energy market. I'd like to think, and wanted to share some of the insights I have from on that sector.
That's amazing. And I wanted to touch base with you today. We're going to discuss about the energy sector and especially how did this situation right now in Ukraine has impacted this conflict. And I wanted to kind of like maybe start with a kind of a broad question. What do you think are right now the kind of the big like implications when it comes to the Ukrainian conflict on the energy sector?
Yes, obviously it's a big topic for the energy sector. I mean, if we maybe take a step back, I think the last big thing for the energy sector was when we saw prices falling in 15, 16. Companies struggled, they put their balance sheets in order, cut costs, started to think about energy transition. Then obviously we saw the COVID demand fell. And then now we have this energy crisis coming from the Ukraine conflict. I mean, Ukraine and Russia, they're not really in the bigger context, huge economies, but the important transmission into the global economy is the oil and gas sector. When you look at Russia, it's the number two in oil exports globally. It's the number one in natural gas. So if we're now looking at the market participants in the West trying to either sanction the sector or partially trying to withdraw from the sector, that means from the global market of supply, you're all of a sudden cutting out a huge chunk of gas and oil supply. Essentially, that means, and we see this every day, everybody who's basically putting petrol in their car can see that prices have gone hugely up. So from that point of view, that is a huge event for the market, but also it goes over the market. I mean, when you look at oil, oil is actually quite fairly easily to substitute or to get to the market if you don't want to have Russian oil. And that's why we see also some of the Russian oil going to India or other markets at lower prices. I mean, apparently India buys oil about $35 per barrel cheaper than where the world market is. But the other side is gas is much harder to substitute. I mean, obviously it comes into Europe by pipeline. If you don't have a pipeline, you need to have specific infrastructure, LNG terminals to move gas around. That is not easily substituted. That means also some of the Russian gas cannot go easily somewhere else. So having this disruption in the supply and demand balance basically is leading to quite high prices. We would see some demand destruction, and also some of the oil producing countries will try to ramp up demand, but ultimately that's going to be quite hard. So we'll see a market which is going to be out of sync for a while. And I think we all see the impact on oil and gas prices in the sense of you go and fill up your car. But on the other hand, we see also the electricity market being
Yeah.
impacted because obviously some people use gas. Then the other thing which people often overlook is the chemical market. What goes into the value chain of chemicals? I mean, it's a lot of gas. So if you don't have gas or you have it at super high prices, that means the whole chemical value chain is also under pressure. And then I think if we broaden that over corporates, you look at sovereigns. For us, it's important. It's expensive to buy oil and gas, but in most emerging markets, often these are subsidized. So the price is going through the roof. That's why India, etc., are trying to buy oil and gas cheaper. But we see also these tension. I mean, obviously we have also the food prices in emerging market, but these tension which also put pressure on many countries in the emerging market. So this is not just something which will impact the energy sector. Yes, that's the first round, but it's going to get much, much broader. And I think that's why it's so much in the focus of everybody.
That's actually pretty cool because, it's almost like immediately leading us to my second question, which is, in your opinion, what do you think, and how would you currently kind of rate in a way the political and geographical, the political and regulatory, risk in the sector? Do you think we are at a medium? Do you think we're at a high? What's your take on that, Anke?
Well, I think political risk sort of you always have. It's sort of always present, but I think we forget about it when nothing is happening. I mean, obviously you find oil and gas also in Norway and in the UK and other strong jurisdictions, but obviously a lot of this you find in countries which are politically more vulnerable. But people put it aside. I think this is a good reminder actually of the risk you have, because Russia was an investment grade rated country. And when you go back, a lot of people were quite bullish on Russian stock market at the beginning of the year. A lot of people had them on a buy. And within a very short period of time, actually that deteriorated completely. Obviously, when we look at political risk in the sector, we're talking often about nationalization of assets. Like we've seen this in Venezuela, we've seen this in Argentina, or that company have tax or regulatory issues. I mean, this is slightly different here. I mean, always people also say when you talk about political risk in the sector, saying, well, these countries, they need the foreign currency, so they never will hurt Western companies too much. In a way, that's actually what we see here. I mean, Russia needs the foreign currency, and that's a problem. Obviously, we want not to give them the foreign currency and to finance the war. But I think a lot of people sometimes forget political risk. And if you are in the energy sector, it's very hard to get rid of it. I think the one thing you can do is diversify. And I think we saw a lot of the majors abandoning projects now in Russia, but given their broad scope, in the sense of diversified, the hurt coming from that is not that massive. In particular, prices are high, so basically they make money somewhere else. So I think from that point of view, it is probably been more to the forefront, the risk. It's always there. But I think the interesting part is, I think what is coming back is a sort of political regulatory risk in the Western world. And I think when you look at it, EDF, they've been hit by the government putting a cap on certain electricity prices. They have been hurt by that. I mean, obviously, France has probably a reputation to be a bit more interfering in industrial policy. But also we just saw the UK, which, conservative government, you would think they should be pro-business, putting an additional tax on UK based oil exploration. So instead of the 40% tax, there's a 25% on excessive profits. So lifting that to 65%. So that's showing that obviously there are inflationary pressures. That is something every ordinary citizen realizes. So governments are quite incentivized actually now to add taxes on companies. I mean, when we look what happened in the UK for the big global companies, I mean, they have assets everywhere. That's not a big thing. Actually, the ones who've been mostly hurt are the companies which are the smaller E&P companies, so the companies which are just in the UK, who do exploration in the UK, have not a big business. These are the ones been mostly hurt by these actions of the government. So the question is this really helpful? Because when you're a company and you look at where you want to look for oil, you look at the tax regime, the royalty regime, then obviously you have to look what type of oil it is you get. Is it deep water, etc.? So if you have a jurisdiction which basically puts on extra taxes are you really incentivizing people to look for oil there
No.
and to help with the squeeze? Probably not, but that's politics for you.
Well, one of the things as well that is right now being discussed is the transition part. Transition efforts from a lot of European governments as well. And I want to have your take on that, like to understand, are really kind of right now the energy transitions that we're saying, the efforts coming to a halt, over the Ukrainian conflict, or do you think that there is still a trend of continuity?
I think the answer is a yes and a no. I
Yeah.
think on one hand, yes, because everybody says, "Oh my God, we need to diversify away from Russia. We need to, get rid of fossil fuel." But obviously, we should pay attention and not confuse between, security of supply and obviously green transition, because obviously, if you don't have resources at home, then renewables are the ones you can produce with being independent. So from that point of view, I think that it's a yes that people say we need to look at this at renewables, but it's also often motivated right now in the heat of the moment by the idea we need to be independent. The no comes from the point of view that obviously right now security is paramount. So it's very nice to think about how you want to be supplied, but what we see is that particularly for electricity, we see a chunk of gas going away. For industrial users, we see also the intention to diversify away. So the question is, how do we ensure that we're not having shortage? And what we see in the short term is the gas, which is missing, particularly in electricity production, going to be substituted by coal. Obviously, coal is not super green compared to gas anyway. So that looks like a step forward back. I mean, in some countries, we see the discussion about nuclear coming back. Belgium has prolonged the time it's going to run its nuclear power plant. Even in Germany, which has a very strong anti-nuclear movement and is determined to exit very soon, there are starting some discussions whether we should stop this. So there's a short-term reaction, but I think in the long term, if we now take a step back from the immediate reaction people have on this, I think the trend is very much alive. I think it's accepted politically. I think it's accepted by people, but the important thing is also the oil majors, etc. Everybody accepts this. I think the big challenge here is to figure out where to focus and where to invest. Because I think everybody would agree, are we doing in 20 years things differently? Yes, of course we will. But the question is, how will it exactly look like? Just an example, I mean, when you have a electric car, will I fuel it recharge it at home? Should I go to a type of petrol station, to recharge station? Where should I invest? And I think this is one of the challenges also for companies to figure out where you want to invest. I mean, coal is out. I think depends on the country. Nuclear, there's a big question mark on some countries. Don't see this as the future. Some do. Gas was always considered as the bridge, to say we have renewables, but renewables, the problem with renewables is if it's not windy, there's no electricity. So there was always, for the future, gas considered at the bridge. But obviously now we're all trying to get away from Russian gas. So I think the challenge is not as much whether company want to be green or not, but the question is, what is the right thing to invest in right now? And
absolutely.
the good thing is there is money. I think that's a good thing. When you look at prices, people earn. There is revenues. There is cash flow. People can invest. I think there needs to be a decision where to invest. And I think coming back, you talked about governments. I think one big takeaway maybe also from this is obviously governments have an energy policy. I mean, it's about security, it's about geopolitical security, etc. But I think what we've seen, Germany is a very good example. Governments can make the wrong decisions. I mean, we saw Germany exiting nuclear, coal, and betting on gas as the bridge towards renewables, and basically being very, very dependent on Russia. This was criticized, this was highlighted, but the decision was made. So I think the big takeaway is also maybe for governments to be a little bit cautious, to be too much focused on one solution, but that you want to have diversification and that you want to have optionality. I think
Absolutely.
one of the things yesterday, the EU decided that they want to abandon combustion engine cars by new cars by 2035. Then, on one hand, yes, you want to give the industry security, but then you have people who say there are synthetic fuels which are not yet quite developed, but we could use them. So I think energy policy going forward needs to be also aware, maybe to be broad based and leaving options open, because I think one of the things we took away from where we are now is that we very much focused on one solution, and if that goes wrong,
Then you don't have
then
any other options, obviously.
you lack optionality.
Yeah, and building up on that, this like one last question for you, Anke. Super insightful, by the way. When it comes to the fundamental outlook that right now companies have in the sector, what do you think? Where are we heading? I'll try to answer it in a short way in a couple of minutes.
Yeah, I think people are quite bullish on the sector. I mean, if you look at commodity sectors, I think the simple one is if the price is high, you make money. If the price is low, you don't make money, kind of in layman's terms. So obviously, companies have reduced cost structures a couple of years ago when prices fell. So cost structures, they make money around 50,
Yeah.
$60 oil. So they make money. Obviously, you're going to see price inflation also in the cost base oil companies have. And we've been through a period of underinvestment, so there needs to be capex. We've seen some extra taxes, but if you net all out and compare it towards other sectors in the world, I think this is still a sector where a lot of people are fundamentally quite bullish. Some people think it could be a golden age. I'm not quite sure whether that's getting a little bit ahead of themselves. But if we look around the world, I mean, consumer companies, you see the confidence flagging, people talking maybe about recession. You see people getting squeezed. The top line doesn't grow. They get squeezed on electricity, transportation costs. There's uncertainty about margins. Interest rates go up. There's a lot of things going on. This sector is as quite high prices. They go into this with most of them with quite strong balance sheet. You see quite strong cash flows. So I think if you look across the board, this is probably a sector which is compared to many of the others for the next 2 years, where prices should definitely remain high.
Yeah.
Very well positioned.
Very good. Well, super insightful. Super insightful. Big thank you again, Anke, for these elements and for these infos. We are going now to open the floor to the public. If you guys have any question, feel free to let us know. We are streaming on LinkedIn and YouTube, so if you have any questions from the floor right now, feel free to ask it. I'm probably gonna start the warm-up by asking a question myself by the time we have a question from the public. When it comes to the renewables right now, and we were talking about earlier Germany making the bet on natural gas to kind of make that bridge into renewables, what are the renewables that are going to be not mainstream, but in a way a bit hot, for European countries, according to you?
Well, I think wind is mainstream. I think solar, although obviously is much less than wind, is mainstream. I think people looking obviously at alternatives like hydrogen. That is something people look at. I think biofuels, these sort of things people look at. But also, as I said before, some people said, okay, we should not throw away the combustion engine, because if we have synthetic fuels which basically are economically, environmentally friendly, then we can basically keep the existing car type of, combustion engine, but we will put something in it which is not bad for the environment. So I think what I think the last couple of years, but also what this will do, it will open up a lot of investments in the sector. I think people will be willing to look at the sector because people see the opportunities. And obviously, the solution, also the whole energy transition, the solution will be innovation, new ideas. So I think this is something the people focus on. I think there's a lot of money going into it. Also, all the big majors, the oil majors, they all have kind of private equity type of investments and looking for new solutions. So I think there is quite a lot of things happening which we probably don't see right now, and new ideas of trying to solve this energy transition.
And one follow-up question maybe on that. Do you see any kind of like European countries right now who are leading the way in that kind of like transition part, and then be kind of like, in a way, generate a self-sustaining, energy, like way of like powering the entire grid with their own energy, etc.? Any really name of a country that pops in mind?
Well, I think, the interesting bit, obviously, you have lots of different energy policies. I mean, you look at the Nordics, they are gifted with having lots of mountains, Norway, etc. You have water-based energy, which will be super green and, it's abundant. I think to say that there are countries where you say they go the right way. I mean, the French obviously super convinced that nuclear is a solution, although obviously we see they have some problems with their reactors. I mean, there are some people looking, for example, at countries like Greece, where they say, okay, they have a lot of sun, but there's an awful lot of wind. Will you be able to export that type of energy? I think across the board, there are, different countries trying different things. I mean, you see also in Spain, Iberdrola has been always, like years ago, also very heavy in wind, renewables. I think we see different strategies in different places. I think the commitment is there. I mean, I think a couple of years ago, particularly in the US, the commitment towards energy transition was not that big. I think Europe has been always a leader, and big companies accept this. But I think what we need to find is something we can scale, and which is also secure, because the idea with wind is if there's no wind, there's no energy, and that's to most industrial nations not an acceptable scenario. So I think scale and reliability, that are the key issues which need to be addressed.
Well, that's amazing. And we've reached the end of this event, and Anke, a big thank you for your time today and for joining us in this session. So this session is obviously live streamed on LinkedIn. So if anyone wants to watch again, or like share it with anyone in their network, feel free. And we are looking forward to hosting the next Rechecks with Me series. So big thank you, Anke, for joining today.
Thank you very much, and